Hi, this is Matt with Armed Moat Wealth Management. Today we're answering the question, should I refinance my mortgage? When interest rates drop, it can be a great time to refinance your mortgage to save thousands of dollars in interest. But there's a couple things to consider. First is closing costs. Depending on what bank or credit union you go to, they'll have different closing costs they ask you to pay to refinance. It might be a good idea to get a couple different estimates to make sure their closing costs and interest rates are about the same as others charge. You might also be presented with no closing cost options, but a lot of times those have higher interest rates and aren't worth it in the long run. Next thing to consider is how long you're going to live in your house. With a refinance, there's a break-even point where you pay the upfront closing costs and then slowly save interest over time. For a lot of clients, we see this break-even point to be about 3 to 5 years, depending on a few different factors. But if you know you're going to move in the next 2 years, it might not be worth it to refinance, even if you can get a lower interest rate. The last thing to consider is to not add a lot of years to your mortgage. If you have 12 years left on your mortgage, be careful refinancing into a new 30-year mortgage, for example, where you're adding lots of years and lots of interest payments. Even if you can get a lower interest rate, a lot of times it's not worth refinancing in that case.